Ladies and gentlemen, welcome back to the channel. Tesla stock is down 3.86% at the time of recording this video. And in this video, we're going to be going over your Tesla news today. A lot of the news is going to be different analyst commentary, opinions, and new price targets on Tesla. We're going to talk about some of the main points from earnings, but there's one thing that we have to talk about, and we talked about this before Tesla earnings, but the real catalyst for Tesla, it was really two parts. One, earnings, two, November 6th. Okay. Imagine a scenario where everything went right for Tesla. Okay. Earnings were just awesome, beats across the board. Earnings call. Imagine it was the best earnings call we've ever had. Well, there's still this risk that on November 6th, the compensation package, wouldn't pass. Okay. So I really think right now you're just going to be in a period of kind of sideways-ish trading. Okay. I think you probably trend higher into November 6th once the dust settles here, because I think the earnings were a lot better than what some on Wall Street are trying to say. Okay. And we do have this important 20-day moving average right here at about $437.37 per share. So that's going to be an important level that I think we're going to come back up and retest at some point soon, possibly even, tomorrow wouldn't surprise me. Okay. But November 6th is the big day for Tesla. That's where we get a lot more certainty on Elon staying the CEO. Like, that alone has got to be 20 to 50% of the premium in Tesla stock is simply Elon being the CEO. If the vote fails, that's a significant downside catalyst. If the vote passes, that is a significant upside catalyst. Happening on November 6th. I'm actually going to be on a cruise, so we're going to be reporting that live from the Caribbean, maybe Aruba by then. I don't know. I don't know exactly where I'll be, but we will be covering it. Okay, we will be definitely covering it. That's for sure. So, ladies and gentlemen, let's get into all of this information. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us, come invest with us with our strategy. That link is down below. Now, what is our strategy? Well, I don't like to buy the hypiest stocks, okay? The largest, hypiest stocks. Like, I have no interest in buying Nvidia. I have no interest in buying the stocks that everyone knows about and loves. I want to find the next big winner, okay? And that's what we're doing in AI, energy, robotics, software, biopharmas. We're looking deeply into companies to find the good ones and invest in those. The ones that Wall Street overlooks because they're smaller companies. And I think that's the best way to invest in this market, where you can really target those massive upside potential returns without taking on a crazy amount of risk. Okay. So again, that's the strategy. Check it out. Link down below. But let's get into all of your Tesla stock breaking news today. I have this article here that says what analysts are saying about Tesla after its earnings report. Morgan Stanley analyst Adam Jonas said the Tesla numbers were in line enough to keep consensus estimates roughly unchanged. Tesla was noted to be navigating a dignified exit from the steering wheel having auto business while maintaining a resilient free cash flow profile. Going forward, he noted that the company is tied to Elon Musk's ability to steal the fire on autonomy in the face of competition from the Mag 7 and beyond. Wells Fargo analyst Colin Langan said the firm kept its underweight rating in place due to the core business deteriorating and with Robotaxi and Optimus seen as taking longer to scale than anticipated. Quote, little was discussed on the core auto business, which saw surprisingly limited op leverage on growth, advised Langan. Quote, this is likely driven by pricing mix and tariffs. All in, we don't see much to keep fueling the bull run. Wedbush analyst Dan Ives maintained his uber bullish stance. He highlighted that Tesla made important incremental progress with its AI strategy, with its fleet drivers driving over 1.3 billion miles in the quarter, which gives it an accumulated 6 billion FSD miles driven and solid database to improve its FSD capabilities. Quote, "We continue to believe Tesla could reach a $2 trillion market cap in early 2026 in a bull case scenario and a $3 trillion market cap by the end of 2026 as the golden AI chapter takes hold at Tesla," updated Ives. So at about $350 a share, Tesla's a $1 trillion market cap. At about $640 a share, Tesla's a $2 trillion market cap. And he says that could happen in a bull case scenario early 2026. You could definitely see a path for that if Elon's compensation package is approved on November 6th. Okay? You could definitely see quite a rally following that. Okay, a $3 trillion market cap towards the end of 2026 would be a $940-ish price target. So yeah, getting closer to that infamous $1,000 per share level. Now, Jefferies played it down the middle by reiterating a hold rating on Tesla. The current auto business no longer drives valuation, but continues with storage and ZEV income to generate more free cash flow than is now needed to fund future developments, noted analyst Felipe Hochis. So I'm glad somebody said that, because the free cash flow of Tesla was incredible. They added over $4 billion in cash to their balance sheet. Just incredible numbers there. Now it says, on Seeking Alpha, the bears outnumber the bulls in writing up post-earnings assessments. Analyst Bill Moyer warned that Tesla shares remained at an extreme valuation, with weakness and short-term profitability potentially overhanging the stock in the near term. Quote, "The stock is just way too expensive, even if you consider it a part tech company, given its very low margins." This is why this is why you're going to get rich and they won't. Okay? This is why you're going to make a fortune and they're going to not, okay? Because the fact of the matter is, you're investing in a company for the future. Okay? The question really isn't, is Tesla overvalued? The question is Tesla overvalued for the future? Okay? Everyone knows Tesla on a numbers basis is overvalued today. But based on its numbers today, is it going to be overvalued 3 years from now or 5 years from now? Or is it going to grow into that valuation and supersede that? Okay, I believe so. I believe the robotaxi market and Optimus are so big that Tesla, even to take 10, 20, 30, 40% market share, is going to, change the game for Tesla, right? The bears are funny. Okay. Nobody really even talked about November 6th, which that's the big catalyst. I think if we did not have the shareholder meeting coming with a potential for a no vote on Elon's compensation package, and the fact that Elon said he will not be at Tesla if he does not have a compensation package, the stock would probably be up right now. I think there's a little bit of, fear about Elon potentially leaving Tesla embedded in Tesla stock. Okay. Because I think the numbers were good. I think the earnings were good. Sure. Was there slight misses in areas? Sure. But margins beat by a mile. Free cash flow beat by a mile. Revenue beat by a mile. Okay. Sure, they missed on operating income. Who cares? Okay. They added $4 billion in cash. Who cares? It's the November 6th shareholder meeting that has Wall Street a little nervous. Because yes, you've rallied 47% in the last quarter. Okay. It's one of those tricky situations where the next couple of weeks could be a little volatile. Now, this is a pretty incredible graph. Sawyer Merritt says that he made this graph showing average FSD supervised usage over time. In Q3 2025, Tesla owners collectively drove more than 14.13 million miles per day using FSD supervised, a new all-time high. V14 was just released in Q4, so we will likely see a new all-time high this quarter too, but these numbers will seem small compared to what we're about to see in the next 12 to 36 months. So the data continues to flow in for Tesla and for FSD, right? And that's ultimately what matters, right? This is a data world. If you have the data, you have the power, and Tesla has the data. They also have the manufacturing capability. They also have the expertise. They also have the supply chains. If they don't have them, they make them. So that's incredibly important when it comes to Optimus. The fact of the matter is, like, the people that call Tesla expensive today are completely living in a vacuum, okay? Because who else is going to make humanoid robots at scale? Nobody. It's only Tesla, okay? Now, will Apple get involved at some point? Sure, probably. I doubt they're just going to let the humanoid robot market go to Tesla, okay? But Tesla has the manufacturing capabilities. Even Apple doesn't manufacture most of their iPhones, right? This is funny. You think Figure's going to be able to compete with Tesla, Boston Dynamics? They don't have factories. They don't have supply chains. They don't have the ability to build thousands of parts and have a constant flow of those parts coming in. Even Tesla, it's going to be a challenge. It's going to be really difficult. But they're going to be the ones that are able to do it. And most people are missing the ball on that. What kind of value should you give a company today that is going to be one of the only, if not the only, companies that will be able to successfully produce a mass humanoid robot in the next 5 years? What kind of premium would you put on that today? That's why Tesla is quote unquote overvalued. And the bears just miss it every time. Mizuho Securities analyst Vijay Rakesh has increased his Tesla price target to $485 per share, up from $450 with a buy rating. He is ranked number 67 out of 10,084 Wall Street analysts. This is a 5-star analyst, one of the best. Okay, and he just raised his price target on Tesla. Now, Tesla now includes a free 30-day trial for FSD supervised with every purchase of a full set of tires. Rivian is laying off more than 600 people, or around 4% of its workforce, to reduce cost. A month ago, the company did a smaller round of layoffs affecting 1.5% of its workforce to reduce cost ahead of the launch of a more affordable SUV next year. Now, if you look at hedge fund and institutional option activity, it's very strong today. Look at this. You have 141 different trades totaling $78 million with a positive order value of 87%. You know, Wall Street is voting with their dollars, and 87% of them are saying this was good. This was positive. So I think analysts, they're always wrong. They've always been wrong on Tesla, and I think they're wrong again. Simplest way to put it. They're just always wrong. And that's something some retail investors have to accept with Tesla. It's not like other stocks where maybe analysts, can be ahead of the ball. They're always chasing Tesla. Okay, Tesla's going to be a $600 stock, and they're still going to have a $24 price target on them from Gordon Johnson, right? Just some people will never understand until Tesla is producing millions of Optimus robots, and then they're going to be like, oh, wow, well, I was wrong on Tesla, okay? That does you no good, right? It does you no good to pay attention to what analysts say, okay? And yes, there was some positive commentary today, but a lot of people, again, just want to disregard the positive and only focus on the negative. And Well, that's not a good way to invest. Now, short interest of free float today is sitting at 2.78%, $34.23 billion sold short in Tesla. There is about 88,000 shares that are being sold short today as well. So a little bit of a shorting pressure, but not much. Now let's take a look at what's happening in the broader markets today. You are seeing the Russell 2000 outperforming for the first time in a while, okay? Normally, like recently, every day the Russell has been underperforming. Risk on has been selling off. Well, today the Russell is up 0.80%, so that's a really good sign for a lot of our portfolios. The NASDAQ is up 0.53%, S&P is up 0.32%, and the Dow is up 0.09%. The VIX down 2.58%, so that's also good to see. 10-year Treasury yields are sitting at 3.982%. They are up about 3 basis points today. Oil is up 5% following the Trump administration that put sanctions on big Russian oil companies, okay? The Treasury Department said it was doing so because of Russia's lack of serious commitment to ending the war in Ukraine. They say, quote, "Now is the time to stop the killing and for an immediate ceasefire," Scott Bessent said as he announced the sanctions on Rosneft and Lukoil. Quote, "Treasury is prepared to take further action if necessary to support President Trump's effort to end yet another war," Bessent said. "We encourage our allies to join us in and adhere to these sanctions." So oil is going up a little bit today. It's still at a very low level. I think some of Wall Street was getting a little bit nervous because oil was so low. That's really a sign the economy is not doing great. So in a weird way, oil going up today is maybe a comfort to some people. Now, gold. Gold is up 2.35% after seeing its massive liquidation in the past couple of days. I think that looks good to people as well. Same with silver. Silver's up about 3% today. Gold and silver just basically liquidated for no clear reason. Okay. And I think this did spook some people because, again, gold and silver don't drop 6% for no reason. Now, keep in mind, the gold and silver markets are the most manipulated markets in the world. Okay. Heavily manipulated. So weird crap can happen, but I don't think it's necessarily has been a sign that things are wrong in America. I see the economy lately as kind of unchanged. Like not a lot is changing. Okay, come on. Do you want more bites? Now, also in the news today, sales of previously owned homes rose 1.5% in September from August to a seasonally adjusted annualized rate of 4.06 million units, according to the National Association of Realtors. This is slightly less than the analysts were forecasting, but the highest pace in 7 months. Now, we also had earnings from American Airlines today in pre-market. Honeywell, Dow, Hasbro, Nokia, Southwest, AutoNation, and T-Mobile. One of them that stands out was American Airlines, that they actually did very well. Now, that's a good sign for travel. You know, that's one of the things people are going to cut back on if the economy is not doing well. So another strong sign that this economy is holding in there. Today in after hours, we are going to have earnings from Intel, Newmont, Alaska Airlines, Deckers, Boyd, Ford, and some others. Now, this looks like a really good headline. Chinese state oil majors suspended seaborne Russian oil purchases due to concerns about Western sanctions, per the Wall Street Journal. So even China complying with U.S. sanctions on Russia? That seems like a positive headline to me. The White House confirms that Trump's 3 p.m. announcement will be on cartels. Mexican President Sheinbaum says, quote, "We do not agree," when asked about U.S. attacks on alleged drug-running boats. House Minority Leader Jeffries on a long-term stopgap possibility says, quote, "It's unacceptable." China has been building large oil reserves for months, insulating itself from possible U.S. sanctions on Russian crude, per Reuters. House Minority Leader Jeffries says Trump should sit down with Democrats before his Asia trip. House Minority Leader Jeffries says Trump is not giving GOP leaders permission to negotiate. Jeffries says conversations with Republicans have been limited. JP Morgan says that the Fed will end quantitative tightening next week. Now, quantitative tightening is the practice of selling assets off of their balance sheet. Okay, quantitative easing is buying assets from their balance sheet. So stocks tend to react very well when quantitative tightening stops or when quantitative easing starts. Okay, and I don't think we're going to have QE anytime soon. I don't think the Fed's going to be necessarily buying bonds or buying mortgage-backed securities or buying corporate bonds anytime soon, as long as there's not some kind of, big crisis on our hands. But to stop selling assets off of their balance sheet could be a big positive for stocks into the end of this year. So that could be a big announcement next week. Now, the markets are eyeing September CPI and volatility that is likely. U.S. September CPI data drops Friday at 8:30 a.m. with expectations. Headline CPI up 0.4% month over month, 2.9% year over year. Core CPI up 0.3% month over month and 3.1% year over year, excluding food and energy. JP Morgan outlines how the S&P 500 could react. If core is 0.25 to 0.3, you could see a 0.75 to 1.25% gain. They call that a 25% chance. If CPI is 0.3 to 0.35%, the S&P will be flat to up 0.5%. They call that a 35% chance. If CPI is 0.35 to 0.4 month over month for core, you're going to be down 0.5% to down 1.25%. If CPI is over 0.4% month over month, you're going to be down 1.5 to 2.25%. They give that a 5% chance. And if CPI is lower than 0.25, they say the markets are going to be up 1 to 1.5%. They also give that a 5% chance. Now, quantum computing stocks jumped today after a report says that the Trump administration is in talks to take stakes in firms. You had IONQ, Rigetti, D-Wave, and quantum computing all up over 10%. Supermicro released Q1 preliminary sales that missed expectations. Q1 net sales at $5 billion versus the estimate of $6.49 billion. Revenue shift, some expected sales pushed to Q2 2026 due to design win upgrades. Product demand, they say, is strong for Blackwell Ultra, and shares were down about 8% this morning. U.S. Trade Representative Greer on China trade says it makes sense to talk, but we'll see. China's Vice Commerce Minister says we welcome U.S. retailers to operate in China. The Kansas Fed Composite Index today came in at 6, the forecast was 5, and the Manufacturing Index for the Kansas Fed District came in at 15, the estimate was 6. So better than expected data out of the Kansas Fed region. But again, the big catalyst for really this entire week has been CPI that will come out tomorrow. We'll talk about that specifically a little bit more in depth in the next video and how the markets might respond to CPI numbers and, my expectations. So with that said, ladies and gentlemen, hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode. If you want to come join the trading community, come win with us. Now, if you also want to sign up with Public, deposit $1,000, you will get $100 in your choice of free stock. It's a free $100. It's my favorite brokerage, so why not give it a whirl? I think you'd really like it. But those links are down below. That is it. Have a great rest of your day, and I will see you in the next one.